If your business runs on wheels, whether that's 3 vehicles or 30, you know that insurance can get complicated, and it can get complicated fast. So today we're going to break down fleet insurance. We'll show you exactly how it works and how you can get it set up to really protect your business. Let's start with the problem you probably know all too well.
Does this sound familiar? You've got this mountain of paperwork, different premium amounts for every vehicle, and the worst part? Renewal dates scattered all over the calendar. Seriously, trying to manage individual insurance policies for each company vehicle is a classic administrative nightmare. But thankfully, there is a much better way.
And that solution, really, is all about simplifying things. Instead of trying to juggle a dozen different loose ends, you just bring everything together, all under one roof.
So what is it exactly? Well, fleet insurance is just a single policy that's designed to cover all of your vehicles at once. Now, most insurance carriers, they'll say you need about 3 to 5 vehicles to officially qualify as a fleet. But the bottom line is this one policy replaces all those separate commercial auto policies you've been dealing with.
The advantages here are pretty huge. First off, the simplicity is a total game changer. You've got one policy to manage, one renewal date to remember. That's it. Second is the flexibility. A lot of fleet policies are any driver policies, which is amazing because it means you don't have to call your agent every single time a new employee needs to drive a company van. And of course, the big one, it's often way cheaper per vehicle than buying a bunch of separate policies.
Okay, so you're thinking, this sounds great. I'm ready to get a quote. But hold on. Before you even pick up the phone to call an agent, you need to get your homework ready. Getting all your documents in order first is going to make the whole process so much faster and smoother.
There are 4 things you absolutely need. No getting around these. First, the VIN. That's the vehicle identification number for every single vehicle, truck, and trailer you own. Second, you'll need the driver records, or MVRs, for every employee who's going to be behind the wheel. Third, you got to be specific about how each vehicle is used. Is it for sales calls? Is it for hauling heavy equipment? And fourth, you'll need your loss runs. Now, don't let the jargon fool you. That's just the industry term for your claims history over the last 3 to 5 years.
And listen, that loss runs report, it is so incredibly important. If you have a clean record with very few or maybe even 0 claims, you are in a powerful negotiating position. It's like a report card. It proves you're a low-risk client. And trust me, insurance companies will compete for your business with much better rates.
Once you've got all your documents ready, it's time to think about what you're actually buying. See, this isn't just about meeting the bare minimum legal requirement. It's about building a shield, a fortress, to protect your business assets from a catastrophic loss. Let's quickly break down the main types. First, you have liability. This one is mandatory. It covers damage you cause to other people or their property. Then there's physical damage, which covers your own vehicles if they get banged up in a collision or hit by a storm. Uninsured motorists is absolutely crucial. It protects you if someone with no insurance hits your company car. And please, do not overlook hired and non-owned auto. This is a hidden gem that covers you if an employee gets in an accident while using their own personal car for a quick work errand.
Now for liability coverage, I'm going to be really direct. This is not the place to skimp. A serious accident can easily blow past a small policy limit, and that puts your entire business on the line. That is why for any commercial fleet, the standard recommendation is a minimum of $1 million in combined single limit liability coverage.
All right, so you know what you need, you know what coverage to get. Now for the fun part. How do you make it affordable? Let's talk about the keys to unlocking the best possible rates.
First up, embrace technology. Using telematics, those GPS tracking systems from companies like Samsara or Verizon Connect, it sends a powerful signal to insurers that you are proactively monitoring driver safety. And the reward for this is big. A lot of carriers will offer a discount of up to 15% just for having those systems installed.
Second, take a look at your deductible. Remember, the deductible is just what you pay out of pocket before your insurance kicks in. If your business has some healthy cash reserves, choosing a higher deductible, like $1,000 instead of $500, can really drop your annual premium. It's a trade-off worth considering.
And finally, maybe the best tip of all, don't try to do this all by yourself. An independent agent is your single best ally in this process. They work for you, not the insurance company. They can get quotes from multiple top carriers, think Progressive, Travelers, Liberty Mutual, all at once to find you the absolute best blend of coverage and price.
So when you put this all together, you start to see that fleet insurance is way more than just another required expense. It's actually a strategic tool. It simplifies your operations, it protects your bottom line, and it allows you to add new vehicles and drivers without a headache as your business starts to scale.
So I'll just leave you with this question to think about. As your business grows and your ambitions get bigger, you have to ask yourself, is your current insurance strategy a roadblock or is it a launching pad? Is it really built to scale with you?